Yesterday, the Federal Reserve raised interest rates by 75 basis points. Welcome to today's video. Today we are going to take a look at exactly what we can expect with the markets going forward. We're at a very critical point right now. Today is the 28th of July, and yesterday the Federal Reserve raised interest rates by 75 basis points. What they have said going forward is that they expect to not go as aggressively with the interest rates as they have been in the beginning. So some people are expecting them to go a little bit slower, which has quite a positive impact on the markets as a whole right now. So if we quickly take a look at NQ, there's a few things I want to show you that we can take note of. Is first of all, the dynamic money flow indicator here at the bottom seems to be forming some sort of a bullish divergence pattern. The way that we can see this is because back in the 16th of June, we lowered at 0.08, and that is on the negative side with the dynamic money flow indicator. And you can see there's a small trend line that we have up there, and also our moving averages, which you can see here, are busy crossing now into the positive side. The moving averages on this indicator are a 50 and a 100. And this is just telling us that on average, the past 50 days in the Nasdaq has had more inflows of capital than outflows as compared to the past 100 days. The indicator also itself has crossed the zero line, and you can see it's trading now at 0.04. So again, this means that net there is more money flowing into the index and into the market as a whole as compared to money going out of it. Now, if we still look at this indicator, you can see that we crossed over into the red using the moving averages here back in December 2021. So it's been 7 months with the indicator pointing to the downside, and only now, this is the first time that we are actually crossing positive in the past 7 months on the dynamic money flow index. And this is a very bullish sign in my opinion. If we look at the price action itself too, we can see that we still have this downward channel that is formed, and there were many times that we actually found resistance off of this particular 50 line, as you can see all the way going down here. Many times we tested the 50 line and ended up selling off from it, and now we've actually broken through, and this is the first time we've broken through since the 18th of March, and I'm talking about the 50 line on our downward trend channel. And right now we're approaching the upward trend channel line. Because this line is not going to be 100% accurate, we connected the 2 points going from here all the way down to this point over here. So the bottom side of the channel is a lot more accurate than the top side, but nevertheless, we are now approaching or are basically on that line right now. From here, we can assume that there's going to be some sort of consolidation. But again, it will all come down to what the Federal Reserve is going to do going forward. And since they said yesterday they are a little bit more dovish than hawkish in terms of their interest rate policy going forward, I think that is why we're seeing a rally in the markets, especially in the short term. Now, there are two more things technically that we can note on the chart, and the first is the fact that the price is actually traded above its 50 moving average. This has not done that since back in, again, March 2022. So now we've actually crossed above the 50 moving average, and we are busy now approaching the 100 moving average, which is our pink line over here. So I do expect some sort of resistance at that point, and if traders haven't been buying since about the 15th of June, I would say that at this point, if we are grinding down into a shorter time frame strategy, it may be a better bet to just wait it out a little bit and see for a better direction on where we're going. But with that being said, if we look also at the relative strength index, there seems to be some sort of upward pressure as well on that indicator. And we could even say that there is some bullish divergence here too. If we check the price back on the 27th of June and we connect that to the 14th of June. So I'm just going to put two circles so we know exactly where we're looking. Usually with the RSI, when we look for bullish divergence, and this is the best way I like to look at the RSI. I never like to look at the RSI for entries, but I like to look at it for a longer term picture on what the actual strength of a specific trend is doing. And whenever we look for bullish divergence in the RSI, we need to always have the first point below the sell line, the oversold line, which we have here. So for example, bullish divergence would not be so strong if we were connecting, say, a point like this to this. If this had fallen farther down into oversold territory, then it would be a lot more valuable. So at this point we've got these 2 points there, and if we go straight up to the chart where we printed these 2 prices, we can see that we definitely have extremely strong bullish divergence. So this is a very bullish sign on the Nasdaq 100 futures as well. Now if we move on to the gold chart, and I'll just remove the RSI. If I zoom out a little bit for us, and we can see since the start of 2021. Now you'll remember back in around December time 2021, just before the new year started, the Nasdaq and the equity markets made its top and started selling off. Gold kind of held its way a long way during this period of time, and even got quite a strong bid at the beginning as people got quite fearful and jumped into gold as a safe haven. Now what we see is this strong band of support on gold is being tested right now. And since that extremely strong bidding pressure in gold gave us the high of 2087 around there per ounce, we sold right off back down into the support level. This is another very bullish sign for the equity markets as a whole as well. Whenever gold is selling off, it means that more money and more risk is on, which means more money is flowing into the equity markets as compared to safe havens such as gold or silver. And another market that we can take a look at here is the crude oil charts. And if I connect the trend line going back from the 20th of November to the 13th of December 2021, so we're connecting the 20th of November 2020 to the 16th of December 2021, you can see that we have a very strong uptrend, very long-term trend, but we've actually bounced right off of that trend right now. This to me is a very bullish sign, because what's happening is we've had a consolidation period in crude oil, and this could be a sign that we are heading towards at least the highs, where there will be some sort of resistance at this level as compared to falling right through. We had a bit of time where the market was kind of finding its feet at this level. And you can see if you go back on left on the chart, there is quite a lot of demand at this specific level, and we're actually breaking out of this level right now. So for crude oil, I guess the next option is to see if we are going to break above the psychological level, which is $100. And if we do so, I would say the next target for crude is going to be $110, especially in the short term. So again, traders, just to summarize, this is a market recap. We need to look at these situations that are happening in the market and be a little bit more careful than we usually are. Even though things look a little bit more bullish, things can turn around very quickly, especially with what is happening in the Ukraine. So my advice would be, if you have a strategy that you are very sound in and you're very confident in, take that strategy, look at a longer term time frame chart, keep up with the fundamentals, especially in this market environment. And if things are looking more bullish as they are right now, you could say to yourself that you would skip taking any short trades that come up on your shorter term strategy, such as 5 minutes or 15-minute strategy. With the NQ, again, I know this is the most popular market that everybody trades. We're at a very critical level right now, and you can even see that we're approaching this specific support and resistance area. So it was first support over here, then it turned into a bit more support at that point, it turned into resistance there, and we're busy approaching that level now. So once we reach about 13,000 on NQ, we're going to have to expect probably a few days or even a week of consolidation before then the market decides where it's going to go.